This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Hello and welcome back to the Research Talks podcast here on Stockbox, where for me it is a very, very cold and actually snowy morning here in the Netherlands. But Alan, I believe you've actually got a very nice blue sunny sky.
Good morning, Mark. We have, yes, here in Seaford on the south coast. It's beautiful sunshine once again with a forecast of sunny days to come over the next 4 to 5 days. Although, you know, we've had extreme flooding down here, and of course the ice in the morning has been fairly lethal, plenty of accidents and all the rest of it. But yeah, snow in The Hague. That's unusual.
Yeah, it is unusual. Didn't have any last year whatsoever. The first year I was here, there was quite a lot, and that's particularly with the winds and the snow drifts, it can get quite deep in places. But yeah, today it's a bit slushy, but it's certainly settling a little bit on the roof. So caution is advised if you are venturing out on your bicycle today, particularly as well if the tram lines are hidden, as often happens.
That is lethal indeed. Yeah, you
Indeed.
get your wheel stuck in there, then that's not good.
Oh, you see it all the time. Yeah, poor people face planting the road. But yeah, you have to be very careful over here. But anyway, so today on the Research Talks podcast, we're going to catch up on premier African minerals. Of course, we've covered them before, but things progressing very nicely there over at the Zulu Lithium project. And Avacta as well, that's the pharma company that was very popular during COVID, but then had some kind of issues, I think, and a lot of investors were quite unhappy. But you're going to bring us up to speed on that and where they are at the moment. But PREM first, Alan. Do you want to kick us off with PREM?
Certainly, Mark. Yeah, PREM African Minerals, of course, PREM, the EPIC code. Shares have done really, really well over the past year. I mean, we're seeing, you know, from a charting standpoint, we saw that floor at 56p all the way through December. A bit of a drop off in late December, but powering higher now, and with good reason. So Premier is of course focused in Zimbabwe. That's the country of operation. The company also has investment interests elsewhere in Circum Minerals, in particular, where it sold the interest it had in Circum Minerals into shares in a company called Vortex. So now Premier has shares in Vortex, which will of course deliver some value, it is hoped, at a later stage. The focus on Zimbabwe, there are a number of projects. Of course, the key project is the Zulu Lithium and Tantalum project, and that's really central to the value that we're seeing emerge now from Premier as an investment case. But I'm just going to briefly run over the other projects before focusing on the developments at the Zulu Lithium project. So in Zimbabwe, we have the RHA tungsten mine. This has gone through a transition, and there's little news on it at present, but there is a resource there of some 22.1 million tons, and this is of course of tungsten, and tungsten of course has multiple applications in the defense and aerospace and clean energy. There is an issue there with the actual structure and the funding, and that is still very much a work in progress. We then have the Katete rare earths project in Matabeleland on the Zambia border. 25 rare earth claims there, and there's 7 drill holes undertaken. No real tangible progress on that yet. But I think, as often with these companies that have a multitude of projects, once one starts to really develop and evolve, as the Zulu Lithium project has, then a lot of these projects won't be put on the back burner, but certainly they no longer take priority. We then have the Tinde Fluorspar project, and then of course through MN Holdings in Namibia, there is the Ojozondo and manganese mine, and again, there's a shareholding there. There have been no key developments on that to date, but of course, that doesn't mean to say that we won't have some news during the first quarter of this year. So, just a quick focus on the board. Of course, George Roach, Chairman and Chief Executive. George is very well known in South Africa. He's worked for a multitude of companies in the area, and he's been involved in bringing assets to fruition over many years. Along with George, there's Wolfgang Hempel, who's a geologist with 27 years experience, and a number of non-execs that George and the team have worked with. So a very long established team in the area. So we then get to the Zulu lithium project, which of course exploded into life, and it's really been an incredible success story all the way through. And in March last year, funding was raised for Premier, and Suzhou, the Chinese company, subscribed for 12 million sterling to fund the definitive feasibility study. And Suzhou, of course, are massive. They're worth 5 million, and there's an offtake agreement with Suzhou once the mine there reaches production. So we're very late stage now with the Zulu lithium project. In October last year, the company announced that the DFS, so the DFS feasibility study, identified multiple thick, high-grade zones, and this is in an area called the Makachwi River within Zimbabwe. And again, lithium-bearing minerals, or spodumene, which of course contain the lithium oxide, spodumene content in the thickest pegmatite sections, which were identified. The DFS and the funding that was raised is now building a pilot plant, which will be commissioned very shortly. So it's on schedule for commissioning Q1 2023, and that's based on an initial SAMREC compliant. That's not a JORC compliant. SAMREC is the South African equivalent of the JORC resource. SAMREC compliant resource of 8 to 10 million tons of lithium oxide from these spodumene bearing pegmatites. And what this means is this pilot plant will support the production of 5,000 tons per month initially from the pilot plant. And of course, once that is underway and complete, then the company will probably raise some additional money to complete all the plant and service infrastructure. And there's a capex estimate of around $34 to $35 million there. But there is, with the interest Suzhou have already invested into the project and the development, we can already see across social media that there have been a number of developments. In fact, there have been a number of images and video clips on Twitter recently. The Suzhou chairman, Pei Zhenhua, came to site and was speaking on the site, and you can see in the background there is an extensive array of infrastructure already in place, which really, I think, graphically illustrates the progress that Premier have made in bringing this pilot plant on stream. Now, Pei Zhenhua has indicated that he'd like to increase investment into this project. So of course that's not yet been confirmed on an RNS. So we just have to take that as a social media post. But I know, Mark, there are other social media posts out there that have very clearly and graphically stated Suzhou's interest in the project. And of course, just before Christmas, we had an update from Premier on the developments and the progress made with the pilot plant, repeating that multiple thick high-grade zones have been identified. The thickest pegmatites were identified both north and south of the Makachwi River, in a huge lithium bearing mineral body. And George and the team also reported good progress at the mine itself, and I think that's become patently obvious through the social media posts being put out there by Xu Zhao. So Premier is at a really exciting inflection point. We've seen this gradual building in value since the dip off on the 15th of December. The shares promptly jumped back up again from 41p to 53p, and here we are now trading at 56p, which is an all-time high for Premier. Gives it a market cap of 126 million, but I think in the grand scheme of things, when you look at the scale of the mine and the plant that's been built there, this is almost loose change compared to where Premier could be. I think in the very near future, with this pilot plant coming on stream, we get some indication of that spodumene and lithium being sold into the market, and then I think we'll have a real benchmark for value. And it's highly likely we'll see an upward revaluation in the share price and the market capitalization of Premier.
Excellent. No, it's really great to see, isn't it, Alan? These pictures and the videos coming through on the social media there of the pilot plant being constructed, all brand new, nice, shiny equipment there being assembled. And of course, you mentioned there the chairman of Shuzhou has been on site with his team, which is significant, making a site visit, looking at all the workings that are going on, the dam that's being built, the pilot plant being assembled. I guess just to make sure that he's happy with the company's investment in the project. So it's really nice to see that high quality media there coming from the Premier social media channel. And it's fantastic to see a company get to this stage where they can actually get into production and build from there, when they become cash flow positive. And it's fantastic for shareholders, a long time coming. And it's unusual as well, isn't it, for juniors in this space to actually get this far. But hats off to George and the team to actually got there with Zulu Lithium. And the plan, hopefully, all being well, I'm actually going to go on site at some point, hopefully not too long after the pilot plant is actually, as George says, hot commissioned. So it's actually in production, to get on site and see what's going on, get some interviews done, get some footage recorded, and hopefully bring shareholders some good media as well, and get some questions answered that they want, a bit of a site tour, all these kind of things. So that is the plan. I'm quite looking forward to that if we can make it work. The first time I've been on site at a project, mining project. So all being well, that should go ahead, and I think they're still on track for sort of mid-February-ish, I believe, for the hot commissioning. I mean, it might slip a week or so, but that is, I think, still the plan. So, yeah, excellent. It's very good to get that update. Thank you, Alan. So,
no, it is really exciting, as you say, Mark. This is why we invest into small cap mining exploration companies, because they evolve. When you get these developments where they evolve from explorer into producer, it's the share price obviously takes a quantum leap. So shareholders who were in with Prem at the start are now seeing it come to fruition, and it's immensely exciting, both in terms of the value upside, but also when this mine comes on stream, it creates employment. That feeds through into education, to health, into so much else. So it's actually, you're creating prosperity for the region too, which is a fantastic thing. It's a really exciting development. And congratulations to George and the team for bringing Zulu this far. But just bear in mind, as I said, Zulu is obviously the value driver in Premier, but we have these other projects throughout Zimbabwe that I talked about at the start. Just have a look at those. Go to the Premier website and have a look at those, because at some stage those will come on stream too, and that will be a completely separate source of value.
Indeed, it will. Indeed. Well, thank you, Alan. That's great. So let's talk about Avacta then. Bring us up to speed on Avacta.
Avacta it's a really exciting company, and of course, all of us who were in the markets through COVID will have heard of Avacta as a provider of a SARS COVID lateral flow test provider. and of course AFIDX. If you go to the website, you'll see the AFIDX SARS-CoV test. Lateral flow test is advertised very clearly, or very clearly shown under the product section on the home page. But Avacta have been a long-standing pharmaceutical and life sciences company. The shares are currently trading at 155 pence, and if you look at the chart over the past 5 years, you'll see the shares were trading 22p on the 27th of March, and then of course on news of the COVID test, they exploded into life, and it became a trader's dream. There was so many ups and downs. Shares hit highs in March 21, topping out, I think, at a little under £3 a share, and then of course came all the way back down again, down back to 46p in March last year, and here we are again on a value run, but with very good reason. So the team is driven by the chief executive, who Alistair Smith, and Alistair Smith I've seen present at various events throughout London. And Alistair has he has a degree and a PhD in physics from Manchester University, took up a position at Leeds University, and he left his academic career in 2007 to join Avacta, and has been at the forefront of driving value in the company ever since. A very experienced board under him, Elliot Forster, the non-exec chairman. Elliot was involved with Immunocore, and has secured partnerships with AstraZeneca and the Bill and Melinda Gates Foundation, worked at Glaxo, and went on to hold a number of senior roles at Pfizer. Trevor Nichols, non-exec director at the company, 35 years experience, former vice president of Affymetrix, and has been involved with GE Healthcare and a number of biotech and life sciences companies. And that's just covering a few. There's a hugely experienced board supporting and driving the business forward. So the technology for Avacta is based around Afema, which is a biotherapeutic-based cancer immunotherapy, which uses human proteins, the stephin A, which are 10 times smaller than antibodies. And it means that the technology is easy and quick to develop, and it on the back of that, a pipeline of clinically differentiated cancer immunotherapies have been developed. And of course, with cancer immunotherapies, the key treatment at the moment is and has always been chemotherapy, and of course the side effects and the patient trauma involved with chemotherapy is well documented. The other trademarked technology within the Avacta within the Avacta portfolio is the precision technology, which incorporates incorporates a chemical which generates bodily resistance to chemotoxins, and it offers it offers huge benefits to patients, and it just makes the process for the patient an awful lot easier. So throughout COVID, we've had a series of developments, a number of joint ventures, collaboration with Avacta Therapeutics, who in turn have a joint venture with Daewoo Pharma in South Korea. Then working with Cytiva GE Healthcare, the rapid antigen program. Medusa became the distributor for the antigen product, and all the way through COVID, the company developed and grew the business to the point where last November the company raised 2,095p as part of a fundraising package to acquire Launch Diagnostics, who are based in Longfield in Kent. And Launch Diagnostics provide both immunodiagnostics and molecular diagnostics, and have done for many years. They have 70 employees. They acquired the company for 24 million, and there's a 30 million earn-out built into that, which is based on certain KPIs, key performance indicators. But the Alistair and the team see that they said at the time they saw significant opportunity in across the EU and UK to build this immunodiagnostic and molecular diagnostic value chain through acquisition. So that is the plan going forward. So we've seen, of course, the Avacta share price grow and develop on the back of that. Of course, coming up to October, the share price flipped a bit. It really the changes has taken place, and there has been an awful lot of excitement across investor communities and across social media as we've seen the cancer treatments evolve and develop, and the precision technology on January 17th, so a few days ago, Avacta announced the fourth dose escalation of its precision technology within a phase 1 clinical trial. At this trial, 6 tumor biopsies confirmed the tumor targeting potential of Avacta's precision technology. It was very significantly well tolerated by patients, and much less toxicity was noted than, of course, with standard chemotherapy, which, of course, I mentioned just now. Again, a key step forward here. The Safety Data Monitoring Committee, or the SDMC, recommended that Avacta should continue with these tests using a higher dose for the phase 1B and future studies, which will complete during the first half of the year. So there will be more news from this as we go forward. So this is a hugely significant development for cancer sufferers. We have a procedure through precision technology that identifies cancer tumors and can treat cancer tumors in a far less invasive way than existing chemotherapy. But of course, there are so many that the company is driven, of course, by sales of the SARS-CoV lateral flow test, and a number of other key biotech developments are taking place. So the company's currently got a market valuation of 419 million. And of course, we've seen so many times with companies, both listed here, but particularly on the Nasdaq, when companies are at this point, they start to move into billion or multi-billion pound or dollar territory. And I think there is a sense that Avacta is very much on the verge of that with this groundbreaking treatment, which could have a huge and seismic effect on the entire cancer and immunotherapy market going forward. So it's a very exciting time for the company and for investors. And I sense that the jump in the share price this time round will be very much sustained in place of the, of course, boom and not the boom bust, but the rise and fall during the COVID period, driven, of course, purely by the SARS-CoV treatment. So very bright future ahead for Avacta, and I'm sure we'll see Alistair Smith out on the road presenting these developments throughout the first half of this year.
Okay, excellent. Well, thank you, Alan. I do remember we talked about this back in the COVID era. Doesn't that seem a long time ago now, when we were all locked in homes talking about lockdowns and viruses and going outside, covering our faces and worrying about catching this bug, and of course looking at the opportunities in COVID stocks. But I do remember this one being pretty hot, but then coming down quite heavily. But it's nice to see that they've sort of repositioned there and sort of slowly moving back up that value curve there. And that valuation's pretty, that's a decent valuation, isn't it? We're not talking a real small cap, high risk here. This is something that's actually got a decent valuation behind it, and can build from there.
Yeah, well, they can really build on this, but I think when you consider what the precision technology has done, it's now offering a viable replacement for chemotherapy. So the treatment targets and deals with the cancer cells in a different way to chemotherapy, which is far less invasive, and it's tolerated well by patients, and it means that there's a viable alternative. And of course, you consider the implications of that globally, and look at where Avacta is now. I think Avacta at this level still looks really, really good value.
Yeah, indeed. Excellent. Well, thank you very much, Alan, for giving us the investment case there and bringing us up to speed on both Premier African Minerals and Avacta PLC. And wish you a pleasant weekend, and we'll speak again in a week's time.
Thanks, Mark. You too.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.